Rising bond yields and uncertainty over whether this was the close of the Fed's rate hike cycle dragged markets lower last week despite solid corporate earnings results. This Wednesday, we have our in depth monthly client check in, something that we like to call our capital markets update and outlook. This is your opportunity to hear directly from our Chief Investment Officer, Tom Fox. Tom will review the positives in the economy and the stock market, the headwinds, and what he thinks it all means moving forward. You can join us for lunch at our office here in Eden Prairie or online from the comfort of your home, office, or otherwise. We love fielding your questions, so please do not hesitate if there's anything that you would like to ask. And as always, all the details can be found on our website, www.investwithccg.com. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Like I said, rising bond yields and uncertainty over whether this was the close of the Fed's rate hike cycle dragged markets lower last week despite solid corporate earnings results. The Dow Jones Industrials Average sank 1.61%, while the Standard & Poor's 500 fell 2.39%. The NASDAQ Composite Index, which has led for much of the year, slumped 3.16%. And the MSCI EAFE index, which tracks developed overseas stock markets, retreated 1.67%. Stocks rallied to start the week on earnings optimism before losing momentum over those rising bond yields. Yields rose after traders speculated that strong economic data might persuade the Fed to raise rates. By midweek, stocks turned lower as the 10-year Treasury yield moved above 4.9% for the first time since 2007, while mortgage rates hit 8%, the highest level since mid-2000. Stocks were under pressure Thursday as the 10-year Treasury yield moved closer to 5%, and in response to comments from Fed Chair Powell that inflation remained too high. With the 10-year Treasury yield crossing above the 5% mark on Friday, and ahead of a weekend of uncertainty in the Middle East, stocks weakened further, ending a down week on a sour note. The economy continued to evidence surprising strength according to data released last week. Despite worries of a struggling consumer, consumers increased their spending as retail sales rose 0.7% in September, well above the forecast of a 0.3% rise, while industrial output jumped 0.3%, exceeding its forecast of a 0.1% gain. There were also updates in the state of housing. Housing starts rebounded 7% from August, though permits, which are an indicator of future housing starts, declined 4.4% month over month. Existing home sales were weak, falling 2% from August and 15.4% from a year ago. Existing home sales are on track to record their slowest year since 2011. The Social Security Administration recently announced that over 71 million Americans, including Social Security and supplemental security income beneficiaries, will receive a 3.2% increase in their benefits for 2024. However, it's important to consider the impact of Medicare Part B premiums on the overall increase in Social Security benefits. Typically, Medicare Part B premiums are deducted directly from Social Security checks. The Medicare trustees just announced that the average monthly premium for Medicare Part B will increase to $174.70 in 2024, up from $164.90 this year, 2023. The annual deductible for all Medicare Part B beneficiaries will also increase up to $240 in 2024, $14 more than 2023's annual deductible of $226. It's important to acknowledge that many retirees are still grappling with the effects of inflation. The Bureau of Labor Statistics has developed a research consumer price index that attempts to capture the financial experience of older people by reweighting the goods and services that retirees consume. According to the St. Louis Federal Reserve, this number has seen an inflationary rise of 4.15% between August of 2022 and August of 2023. So while the 3.2% COLA increase for 2024 is a welcome development, it is vital to be aware of the impact of Medicare Part B premiums on the overall financial picture. If you have questions about the COLA, please reach out. If you have questions about Medicare, our office may have some resources to point you in the right direction. As always, we will continue to keep our finger on the pulse of what's going on in the markets, what's going on in the economy, and otherwise. This week's key economic news that we are watching includes tomorrow, Tuesday, we have the Purchasing Managers Index, or PMI, coming out. Wednesday, we have new home sales being reported. On Thursday, we have a report on GDP, on gross domestic product, as well as durable goods orders and jobless claims. And then Friday, we have a report on personal income and outlays, as well as consumer sentiment. One of the things that makes SmartMix unique is that we focus on investing in individual stocks, cutting out all those hidden fees and costs that can be found in many of today's investment products. Earnings season is underway. We've got a lot of companies that we're keeping an eye on this week. So very busy week here at the office. You can take a look at the screen there and see a lot of the companies that are reporting earnings this week that we are keeping our eye on. So with that, if we are not investing your life savings for you, you can learn about our low-cost, fully transparent, and personalized approach at smartmixportfolios.com. All right, that's it for today. Thank you for staying until the end. I have another riddle for you. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. We had some very good answers to last week's riddle. Unfortunately, nobody got last week's riddle correct. So if you'd like the answer to last week's riddle, you're going to have to head on over to our website. But today's riddle is, all right, so today's riddle: how many cubic yards of dirt are in a hole that is 9 feet deep, 8 feet long, and just 1 foot wide? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. And again, if you would like the answers to previous week's riddles, head on over to our website /riddles to get the answers to previous weeks, including last week's riddle. And then lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning. And it also includes our very popular weekly tax tip. So if you're not getting this email and you would like it, you may subscribe at our website, again, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.